What's up, you guys? It's me, Walt. Good morning. If it's morning for you guys, good afternoon. If so, today is episode 17, I believe, and we're going to be doing a continuance of the video of me showing you how to make a brokerage account to get you started. But we're going to jump right into it. I'm going to show you guys a little bit exactly how I find my stocks and how I find what I like to invest in, and just give you a few of how I will go pick those out and buy those, basically. You know what I'm saying? And I think I already got a pre-made list of the stocks that I have been watching that I haven't invested in. So this is not like me giving you signals on some forex and you just go and copy and paste everything I'm doing, basically. But you can go out and then apply the same strategy that I'm using to find these stocks. You can apply the same strategy to your own get up. You know what I'm saying? Because I don't want you to copy me exactly. I want you to go out and figure out your own way to do it after watching me do it, because there's no way to really do it. It's just lots of different ways to do stuff, basically. So here we go. Oops. So, alrighty, you guys. The way I be looking, going into trades, stock ETF. We go to research and ideas, and then we go down under markets and we tap sectors and industries. And this is basically sectors of specific industries. Looks like utilities is doing good. This is one day. Everything does good. Information technology is going yay. But we're going to go down to energy, because I believe energy is the best thing you can invest in. EV vehicles and electric vehicles are going to be the future. I don't care what anybody's telling you right now. Everybody and their mom does not like dealing with cars nowadays. So it's like even me, I don't ever deal with my car. My dad is my mechanic. So therefore the future is renewable energy. The future is like electric cars. So what I'm gonna do is invest into energy. Like, investing in energy is one of the smartest things you can do. It's gonna be around when our kids are. So energy is where it's at. It's gonna be the main thing that everybody is gonna be using. And when I look at this list, I don't exactly look at these right here, because these could help you if you stare at them long enough. You're gonna know what dip you're looking at and stuff. But that dip that we are looking at, that's coronavirus, basically. So this is like kind of like not real right now. Like, everything's gonna have a dip. You know what I'm saying? Before Corona came, that's when I was really looking for dips and stuff, because I want to be a part of that growth. But that's not what's going on right now. But EOG right here is a perfect example of a stock. So once we get here, we're not looking at today's change. We're not showing why is it moving down. They give you a little bit of insight on what exactly is making it dip. And I'm not going to buy that, basically. And we're looking at the price. Boom, right here. This is the price. 41.31, right? Okay. Let's see what's happened to them in the past 2 days. See what kind of growth is going on with them, basically. Come on, don't do this. When has it done this? Okay. Come on, man. This is the first time it's ever done this where it actually needs to load a chart. Past 2 days, they've been going down. They just been going downhill, baby. Which in this case is a good thing, because we all know companies are made to make money. All they're gonna do is make money. And you see this, just 6 months ago they had the shares at $60 and it dipped back down. This is all before Corona, so this is a kind of something that you need to look at and pay attention to, because this is going to show you the patterns of their growth. You know what I'm saying? And watching the pattern of a growth is going to, whether it's going to give you the idea, are they tanking or are they growing? You know what I'm saying? And it's like, you don't want to invest in something that's tanking, but at the same time, they can always go back to their exact, their level of what they were playing at. And if you think about a year ago, what they were doing is $90 a share, and so on and so forth. You see that they've been dying out over the years, but this is an energy company. Shares of several energy companies are trading lower as oil prices dip after Saudi Aramco cut prices for crude exports. So they're trying to say, well, some of the reason why this is going down is because of another oil company is cutting prices and stopping the exports of crude oil out of the country, basically. So it's like, there is anything that can mess with the volatility of energy stocks. So that's why I would say, about if people are looking at like, oh, that's not a good investment because of this, so and so and so, but this is only what's going on right now, and this is not the future of the company. Because if we come down here to the latest news, it's gonna show you all kind of stuff about the company. Basically, when you look at a lot of this is good news, because all it is telling you what the company is doing, basically, and the company is trying to make a way back, is trying to, you know what I'm saying? 'Cause that's all companies do, No CEO sits at home and says, oh, we're not growing and we're going to tank. Like, they're paid to make the company perform better. They're getting, so it's all in the pattern and having the belief, you know what I'm saying? Because if you go into EOG's company file, so this is a oil company. So let me scratch a lot of the things I said about it being energy, even though I would say they're somewhat similar, because they can be almost as volatile when it comes to exactly how they're being ran, basically. Because it's like, there's a lot of oil companies, I'm telling you, there's like bajillion oil companies, and they're all making bread, you know what I'm saying? And it's like, it is where you want to be at on the scale. If you want to, if you're more into oil or energy, to me it's all the same thing, because there's still a volatility in it. And it's like, I'm not trying to get lost on my subject, but what I do see is that there is a comeback growth for this company, and I honestly believe it's going to happen, because even though I say energy is energy, I don't see oil dying out anytime soon. I really don't, because a lot of America is still going to run on oil. There's going to be a lot of people who still running stuff on oil. Just because EV cars are the future in 10 years doesn't mean that my Hyundai Sonata is not going to run off gas in 10 years. You know what I'm saying? So it's like, it's all about knowledge and exactly what you're investing into. That's one thing I would say, because people are looking at this right now and probably don't have any investing experience at all, and they're looking at like, oh, he's investing in oil and blah 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 blah. I'm not saying invest in oil. I'm saying you can use these same exact tools and the same exact methods I'm using to find the right trade, so you can understand and have a peace of mind on what exactly you're buying. You know what I'm saying? Because if you don't, then you're kind of just shooting in the dark. If you don't know exactly what the fuck you're buying or what you're looking into, or, you know what I'm saying? If you don't know, then you're just shooting in the dark, bro. I wouldn't invest if you don't know exactly what you're buying and shit. You gotta know exactly. You can't just look at the numbers. You can't just look at some of the news. You gotta really go to their website. Like I'm gonna show you right now. We're gonna go to their website, and we're gonna look at the website and see exactly what they're doing on the website. And I'm pretty sure they're gonna show their earnings and all of them things. And we're gonna look at the earnings and see what the earnings are talking about. EOG Resources Inc. Homepage. Boom. Oil company. You don't look down to investors, because they already know. They got investors. They got a whole page just for investors, whatever you need. Look at some statistics. This is the volumes of their crude oil at the top. All of the natural gases, liquids, condensate prices. were strong in 2018. Because in other areas like natural gases is doing better than it has before the corona, basically. Crude oil equivalent volumes are doing better. It's just crude oil. You see what I'm saying? So it's like, you gotta know exactly what you're dealing with. And right here, this is a perfect example, because it's like it shows you oil is not doing so well, but then it's not showing exactly what they all do all together in a company. And it's like they also have natural gas and stuff like that, and that is winning right now. So, perfect example of why you need to do your research. That's gonna help you get that peace of mind of knowing that these guys are the ones that invest in. These guys are gonna keep coming back. These guys are, you know what I'm saying? Like, it's just about the research and piecing shit together, because I don't know. I mean, there's companies out there that are not successful, but that's every company's statement when they are becoming a company. They're trying to be successful. They're trying to run it up. You know what I'm saying? And it's like, I feel like it's a no-brainer to invest, because in a way, you don't want to be like me, where years ago where I sat on a bunch of money. I could have sat on a bunch of money in a stock at that time, and I was trying to get into stocks, but I was one of the person who didn't know what it was and all of this stuff, and whoop-de-wop bam. And it's like, now I wish I would have knew this now, because I would have put $38,000 onto a Tesla stock, and I would have been sitting on more than 100-something grand basically, and in counting. So it's just about what you know. Earlier you get in, the better. You're catching that growth, and you're getting your money, man. You gotta keep doing the same thing over and over again for different stocks, basically, you know. And like they say, the historical volatility is 71%. That means that motherfucker can go this way today, or it can go that way tomorrow. You know what I'm saying? It doesn't mean that like a food company where it's just like stagnant growth, or, you know, it's just leveled growth, because it's a food company. This is a company that has different years, basically. So it's like the volatility, it also can be a bad thing, you know what I'm saying? Because a lot of shit can sway right now. Like Tesla is not looking so good right now, but that's because of a stock split, and a lot of people are selling shares and wop bam. And once that, you know, levels out, it's going to start growing right back, basically. So there you go with the volatility. Just gave you guys a total rundown on exactly how to go search. You look into your sectors and your industries. You can go anywhere you want, you guys. I'm not telling you to go to oil. I'm not telling you to go to the electric. I'm just trying to give you guys a quick little rundown on what I would have went for and what I'm going to do. You can break it down, take it, you know, run with it your own way. Do whatever you want your own way. Now, as you can see right here, this is another thing I want to say real fast, is that there's an annual dividends yield right here. I'm not sure if that's 150 per share you get, but there is an annual dividends, basically. If you don't know what annual dividends is, that's basically what the company is giving you a few dollars for even owning a share every single year, basically. So it's like people who own, like, you know, like big amounts of shares, they're probably getting like a $200, $300, $400 check, you know, every year, because they own hundreds of shares from one company, basically, and they have annual dividends yield. And I think it can fluctuate through the years, you know what I'm saying? And it's like, some people actually rely on some of this as income, surprisingly, because it's like, I don't know who invests that much into one company, but there is people who only have, you know, a few things in their portfolio compared to me, where I have more like 10 or 12, you know, because I'm everywhere with this shit, and I'm trying to do all kind of things. And some people are just fixated on certain things because of that exact thing, of the annual dividends. Because like my Macy's stocks, they have annual dividends. They're paying me. I have a few other stocks paying me. But at the end of the day, I'm not looking at that for that. I'm looking at stocks for this exact thing right here, you guys. That 52-week range. When it says $27 to $89, but that's what they believe they're doing a year. Right now, it's at $41.31. And it may be dropping a little bit lower if you look right here. So, if I was you guys and you're watching this right now, what I would say is you wait a little bit. Maybe wait a day or two. You know, download your app. Put this guy on your watch list. Boom. Add to your watch list on your phone. It should be able to, as soon as you tap it, you can be able to look up to detailed buy or decrease your shares. And you should be able to put it on your watch list. You put this on your watch list. watch it drop by a little bit. You know what I'm saying? Just watch it, because right now they're slowly declining. So if you watch them for a tiny little bit, you might be able to capture more growth by letting it hit $35 or $38, $37, $39 instead of spending that $41, $31 and making a little bit extra more dollars. But I would say make sure you do have everything that you're willing to spend inside your account already, because once you come across some more things, you can't just hurry up and put money in there and it's going to clear, especially if you're trying to put a rack or two in there. You know what I'm saying? If you're trying to go big and you're trying to put a rack or two in there, it's not going to clear that fast. You know what I'm saying? So you're going to have to you're going to have to put money in ahead of time so you already know what you want to do, because it's just like TD Ameritrade is a bank. It's TD Banks, basically. So all they do is hold your money like a bank and they flip it. But you see that 52-week range right there? You want to capture that growth, because it's going to hit 89. It's going to go back. You know what I'm saying? What's going on with the country and everything right now is slightly hindering business in all aspects. So it's like, it's a little dip right now, and we need to get in there. Get in where you fit in, like Too Short said. You know what I'm saying? So it's me, Walt. I done showed you guys how to go and look for a stock and find out what you want to invest in. I appreciate it if you watch all the way through. You know, I like making these videos. I feel really good about sharing my showcasing exactly what I'm doing. You know what I'm saying? Because I feel like I am inspiring people, and it feels good to me, because I like to see people, you know, grasping my ideas and things like that, and they're turning them into something that can help them, or something that is inspiring them to do more than whatever it is that they're doing. And I feel like I'm doing my community a service by doing that. So, you know, I appreciate you guys watching. Hit the like button, hit the subscribe button. You know what I'm saying? Good luck on your hunts, on your stock share hunts. And I'm Walt. This is Word of Walt. And I'm out. Peace.